Hi everyone. Today I want to talk about why holding the bag, as traders or investors call it, why holding the bag on a stock is actually not a bad thing. Um, this is, of course, looking at a losing investment as a positive thing, but it can be. And my reason uh, for saying this is that when you look at a stock, it generally has gaps that it has to fill, or it doesn't have to, but generally speaking, in a lot of cases, it does. So stocks will trade in channels. So they'll generally trade between support levels and resistance levels. And that's why, of course, like for example, one stock that I'm in, Capital, CPTR, uh, one thing about it is there's really no support or resistance levels, or it's very hard to find those because it just started trading, for example, as of October 2017. So it's a relatively new stock. I mean, it was at 2 cents, like on its IPO, and it set a high in January of 89 cents. So think of that return for someone that caught it even under 20 cents. It's a very nice return. But this is a stock that, of course, is incredibly risky. It's very risky because its next support level is around like 20 cents Canadian. And I got caught in a position that was profitable, and I had my price target that didn't hit. So now I'm caught holding it because I don't really believe in stop losses. And in another video, I'm going to talk about why I don't uh, use stop losses. I don't use stop losses myself. I think it's if you're not going to use stop losses, the best thing that you can do for yourself is to stay as liquid as possible. So try and hit that 50% in cash liquidity level, just to, I suppose, mitigate your risk. Um, but anyways, why holding the bag on a stock is a good thing? Because stocks trade these channels like I was talking about, and when it trades between support and resistance, um, you're generally, for the most part, depending on the kind of stock, you're going to see that level again in case the stock decides to shed off. I'm talking about blue chip stocks tend to shed off, like let's say 10%, which is a good amount, 10 to 20%, like in a, let's say, a fairly large correction. So the best thing to do is, I can't stress this enough. If your stocks are down like large, like I'm talking like 50 or 60% or plus, um, this is one thing that I would consider doing for myself is just simply averaging down. If you believe in the stock, if you believe in the company that you made that investment in, and for some reason, which happens, the market is just red, the bears have control. Uh, think of that as a buying opportunity to acquire more equity, more ownership in a company. Uh, that's where um, stock selling off can be a good thing, and it's something to definitely consider. So, anyways, I'm gonna have some links in the description of trading setups that I would recommend, or some books that I myself enjoy reading and that helps educate myself when it comes to the market. There's lots of online resources too. If you want, you can shoot me a message or comment below on any resources that you have found very useful yourself, and just kind of passing on that knowledge to our fellow traders. Thanks for watching.